Hi, this is Sean Overton with One Step Removed, and in this interview I have Jim Rogers. Jim is the author of Street Smarts, Adventures on the Road and in the Markets. Jim, thanks for joining me.
Delighted to be here, Sean.
I'd like to take this all the way back to your first trade, because you've been in finance for 40 plus years. So, do you remember placing your first trade?
No.
Not at all?
No, I could not. Well, no. Well, when I was at Oxford, I bought some IBM and RCA. I remember IBM. I think I had some RCA. No, I don't remember.
And was that you just throwing money out there and you just kind of hope it worked?
Well, I didn't know much in those days. Looking back on it, of course, I thought I did. I'd spent a whole summer on Wall Street, so I thought I must be a genius. And certainly, if you bought IBM in the 60s, probably did okay. I'm sure I made money on it. I didn't buy a lot because I couldn't afford a lot, but I guess I knew enough to be dangerous.
Okay. And you talk in the book about in the 70s you were trading a bunch of puts and you had a really good streak where you made a lot of money and got overconfident, and I think that was your first blow up.
Oh yeah, that's when I lost everything. I tripled my money in like 5 months as the market had a huge collapse and everybody around me was in shock, and here I was tripling my money. I actually covered on the very day the market hit the bottom.
Okay.
So I thought I was a genius. I thought, God, this is so easy. Boy, I wish I'd known enough then about myself and about life. I would have run for the hills when I said this is so easy, because I waited. I knew the market was going to. I thought I knew the market was going to rally. It did rally for a couple of months. I took all my money and sold short 6 stocks, and within 2 more months I was wiped out.
Okay.
I didn't have any staying power. And Sean, the irony is, all of those companies, within 2 years, were bankrupt. I lost everything. First, because I didn't know about markets, enough about markets to know that they could do foolish things. And they did. Even though they all went bankrupt eventually, that didn't mean they didn't skyrocket in the meantime, and I lost everything.
So, and then on the topic of blow-ups, it seems like an enormous percentage of investors and traders have blown up at some point. Do you know anybody that's been successful over the long run that hasn't blown up?
I don't know, because most people don't talk about their blow-ups. I have no clue at all. I presume many people have had blow-ups, to use your term, but I just don't really know. I don't sit around talking to people about, tell me about your disasters. It's not something most people like to talk about.
Yeah, I always bring it up because a lot of these interviews, almost everybody I've talked to has blown up at some point, and it's the best education you got.
Well, it certainly teaches you a lot about yourself, about the markets, about everything else. Many people don't come back from collapses or from failures. Some do. Some don't come back after 2 or 3 failures. You learn a lot about yourself.
It depends on how stubborn you want to be.
Or how foolish you are, yes.
Okay. And it sounds like from that blow up with the puts, a lot of the problem was that you were over-concentrating in a position. But you also mentioned that in the book that you like to concentrate when you have a really good investment.
You know, the way you get rich is you focus. You find something really good and you focus, and that's how you get rich. You don't get rich, diversify. It wasn't so that I was over concentrating. It was just I didn't realize about markets. The market had a huge collapse. Now, I didn't realize that even after huge collapses, markets can have big, I mean, the Dow Jones must have almost doubled in the next 2 or 3 years because the Fed was printing, for lots of reasons. There was a selling climax. I mean, all of these things I know now. I know what markets are like now. I didn't know about selling climaxes and the huge rallies afterwards and Fed pumping money in. I didn't know about all that stuff. Had I known, I would have had enough sense. I probably would have gone long those companies instead of going short. I just didn't know enough about the markets. I don't see that any diversification would have changed that. It was not so much. Well, it was too much focus, and then I focused on the wrong thing. If I'd been right, I'd be a genius. But
yes.
I focused on the wrong thing.
So, with all the number of opportunities out there, do you think there's ever a trade that's so good that it's worth putting all of your money into?
No, of course there are trades like that. I wish I knew one right now. I don't. Well, I do. I do know one, but I cannot do anything. Yeah, of course, if you can find something that's worth all of your money and you know you're right, of course, I would love that trade if you can tell me what it is.
And then when you're trading on leverage, how do you strike the balance between maximizing the opportunity and making sure that you have the staying power in the market?
Well, you just answered your own question. You make sure that if there's going to be a setback, that you don't get wiped out. You keep enough reserve, because markets do foolish things at times. You know, if the world blows up, everything is going to go down for a while. And if you're too over leveraged, you're going to lose everything, even though you might be right in the long term, as I was back in those days. You really need to keep something in reserve so you don't get wiped out on short-term fluctuations.
Do you have that number in your head when you're...
No, I have no idea what that number is.
Oh, it's just a case-by-case basis? Okay.
Yeah, I don't have any set rules. Maybe I should, or maybe I should have at various times in my life, but no. There are no set rules, set numbers, nothing.
Okay, well, it's interesting you bring up set rules, because a lot of the people on this channel tend to trade algorithmically. Do you have an opinion on how algorithms have affected the markets and the validity of the approach?
Anything that people can do that they can make money, they should do. I mean, I have nothing against any of it. If it's throwing darts, if that's your way and it works, then do it. So no, I don't have any opinions on pro or con on how people make money or how people invest their money. There are always new ways to invest. There always have been since the beginning of time. And these guys who have algorithmic trading, I mean, if they know what they're doing and if it works for them, they should do it. I wouldn't have a clue how to do it, but it doesn't mean other people shouldn't do it and shouldn't continue to do it. It adds some liquidity to the market, and I'm sure it's going to cause problems at times. Most things do eventually when they get overdone, but that's what a market is.
Yeah. After you have a long streak of winners, you tend to get overconfident and overzealous in placing trades. How do you deal with that emotionally? How do you make sure that you don't go crazy and you're making good decisions?
Well, I wish I had an answer to make sure I'm always making good decisions. The only thing I know is and this only comes from experience, just be very aware that you've had a good streak and be more careful than you normally would, and really you probably should restrain yourself and try to do nothing unless you're really, really sure. Because the hubris or the arrogance which comes from a good trade, or certainly a lot of good trades, whether we like it or not, we're all human and it can affect you. You probably should just close the window and read a book or something and do nothing for a while.
And going on the opposite side, when you have losers, your decades of experience in this, do you still have trades or investments where you're beating yourself up and thinking, I really wish I did that differently?
Anytime I lose money, I wish I'd done it differently. Yeah, of course. Sure. I say, why didn't I do it differently? No, of course. And when you do a few bad things in a row, I anyway, and I hope most people, stop and figure out what's going wrong, what's wrong here. You can't just say it's because the moon is wrong or the stars are wrong. You have to figure out, and that too may be a time when you should do nothing for a while till you can calm down and not get too bogged down in the mistakes that you have made.
Do you ever do a post-mortem, whether it's winning trades or losing trades?
I always do. When I mean, how can I not? I know why I bought it, why I sold it. No, of course, I always do it. I don't sit down and write it all out and study it, but I know in my head what was going on, and so of course I think about it a lot.
You talk about your portfolio a lot and how you concentrate trades and how you have to learn on your own, but you also encourage people not to just blindly follow your advice.
I hope nobody will follow my advice. I hope nobody will follow your advice or anybody else's advice. That's a fast way to the poorhouse, and it certainly doesn't teach you anything.
What do you think people are trying to do when they just follow advice? Is it an unwillingness to learn, or?
Everybody wants a free lunch. Everybody wants a gift. Everybody wants to win the lottery. Everybody says that guy, that woman knows what she's doing, and if she says the sky is blue, my God, the sky must be blue, and I'm going to do something. But suppose I told you to buy X, and you went and bought X, and it doubled. what you would do is you would tell everybody you know how smart you are. You would say, I bought X and it doubled. I bought it for these reasons. Oh my God, it doubled, blah, blah, blah. But you don't know what to do. You don't know whether to sell it, whether to buy. You don't know why you bought it in the first place. Maybe you should be selling it. Maybe you should be selling it short. Maybe you should be buying more. But you don't know what to do because you don't know why you bought it. Now, Sean, suppose it went down 50%. What you would do then is you would tell everybody, you know, that SOB Jim Rogers told me to buy this stock, and I did, and it went down 50%, and he doesn't know anything. If it goes up, it's your idea. If it goes down, it's mine. But again, you don't know what to do. Maybe you should buy more. Maybe you should sell it short. Maybe you should sell it. But you don't know why you bought it. So you don't know what to do, and you're not going to call me, because I'm not going to take your call and say, what are you talking about? It just doesn't do you any good to listen to hot tips, because they're not going to teach you anything. And even if you win a few lottery tickets, so what? The next time you do it, you're probably going to lose money because you don't know what you're doing in the first place.
When you learned about the market, you were working 15 hours a day. You retired at 37. That took a tremendous amount of work to get to where you are today. And you talk a lot about your work ethic. For the little guy at home that's trying to trade or trying to invest, do you think it's possible for him to achieve success knowing how much time it took you?
Well, yeah, of course. Some people are just smarter than I am, so it'll take them a lot less time than it took me. First of all, you should be doing what you love. And if you really love gardening or who knows what, baseball, that's what you should be doing. Now, if you love this too, and this can be your avocation, then you should do it. A lot of people have avocations. I mean, there are a lot of people who know more about the NBA than I'll never ever know about anything, because they sit and watch basketball and read about it, etc., etc. And that can be a great avocation from their primary job. They should figure out some way to go into basketball if they love it that much. But you can have a vocation and an avocation. I would recommend people turn their avocation into a vocation if they can, because then they're going to be more successful and they're certainly going to be happier. Yes, you can do it, but investing, at least for me, is a hard work. It takes a lot of time, energy, effort. It's not something you just sort of sit around and say, well, this Saturday afternoon I'm going to do my stock market stuff and then I'm going to be successful. It's not that easy. Do you ever sit down and place a trade, or is it always very well thought out and you've chewed on the idea for a couple of weeks? The ones that go right are well thought out, and the ones that where I lose money, the ones I just place a trade. No, of course, I always think I've thought it out, and I have. It doesn't mean I don't get it wrong at times. You talk a lot about preferring commodities over stocks. Why? No. At times I prefer commodities over stocks. There are times when commodities should be shorted. No, it just depends on, it depends on the supply-demand situation, where the world is, the cycle that's going on at that particular point in time. I don't prefer anything. I didn't mean as an investment right now. I meant as an asset class for trading. Like in the book, you talk about commodities are simpler because... Well, commodities are certainly simpler. I mean, cotton doesn't care who the head of the Federal Reserve is, doesn't know or care. All cotton cares about is there too much cotton or too little cotton. Now, that's simple. It's not easy, but it's simple. Knowing about Toyota, not even the chairman of Toyota can know all about Toyota. He's got hundreds of thousands of employees, parts, plants, governments. He's got to worry about a lot of stuff. Distribution. Cotton is a lot simpler. I didn't say it was easier, and I didn't say you couldn't make more money in Toyota if you get it right, even though you don't know as much. It's just that it's a lot simpler to figure out the supply-demand for wheat or cotton or tin or something. And you've mentioned currencies a lot. When you try to take currency exposure, do you typically invest directly in the currencies, or do you tend to buy instruments like bonds or foreign stocks? Both. It depends. You can do both, and both are satisfactory and profitable or losing propositions, depending on whether you get it right or wrong. And you mentioning gardening actually brought up something I was curious about. You talk a lot about agriculture and how you think over the next 20, 30 years the farmers are going to be the ones driving Lamborghinis. If you were in my shoes today and you're relatively young, would you be more interested in the markets, or would you go
start a farm?
I can't tell you what to be interested in. You've got to figure out what you're interested in on your own. When I was 17 or 27, if Sally had said to me, be interested in sofas, what good it would have done her to tell me that? And maybe I should have been interested in sofas. But I'm interested in what I'm interested in. And everybody's interested in what they're interested in. Yeah, I can say, go be an accountant, go be a dentist. But maybe you'll be a successful dentist. But you will not be a terribly successful dentist because that's not your passion. You'll be terribly successful at what your passion is. So it doesn't do me any good to tell you what to do. It's not going to do any good. Even if I say be a gardener or a farmer and you hate farming, you're going to probably fail. You know, and even if you go into farming when it's terrible, you're probably going to be successful because you love it so much.
To the newbies that are watching and somebody that wants to learn how to trade, what do you think is the best way to go about it? Do they read books? Should they just open a trading account and start?
No, don't open a trading account and start until you know what you're doing. The way to start is to start with what you know. Now, everybody watching this knows a lot about fashion or cars or sports or something. Start there. When you see something really exciting changing in fashion, if that's what you know, then start doing more homework about the people, the company, the competition, who's doing what in that particular field and in that development which you see. You're going to see it before I do, because I don't know anything about fashion. I don't sit around reading about it, watching TV about fashion, but you do. So you will see something that you know a lot sooner than me, a lot sooner than Wall Street, about what's coming, and then you do your homework, and then you open the account, and then you start investing. You'll know when to sell it much better than I will. If I eventually even hear about it, you'll know when to sell it, because you'll know when another better product is coming, or when the Chinese do it cheaper, or when somebody else has got a new innovation or something. You'll know when to sell it long before I will.
All right, well, that was all the questions I had for you. So, Jim, thank you for joining me.
I'm delighted, Sean. I hope we do it again sometime. Thank you.
Thank you. And thank you for watching.